Korea's benchmark index just had one of its roughest two-day stretches of the year, and traders didn't hide where they moved their money. Tether and Bitcoin trading on Korea's exchanges jumped 82% over those 2 days, with 2.6 trillion won changing hands. SK Hynix shares hit their lower limit and barely traded, while a crypto futures unwind forced roughly 83 billion won in liquidations. And with long-term rates climbing across the US, Japan, and the UK, Korean regulators are watching their own debt servicing bill grow heavier. It's Friday, July 31st. Let's break down what's happening in Korea's financial sector. The past week's volatility in Korean equities pushed some investors towards stablecoins and crypto as a way to move money out of won-denominated risk. That shift collided with an already jumpy market, where SK Hynix, one of Korea's most heavily traded stocks, briefly locked at its daily limit. Regulators, meanwhile, are watching global bond markets tighten just as Korea's own household and government debt levels stay elevated. Here's what the numbers show. Tether and Bitcoin trading volume on Korea's three major exchanges hit 2.6 trillion won over July 28th and 29th, an 82% jump, as the benchmark index fell sharply both days. SK Hynix shares dropped to their daily lower limit and effectively stopped trading, dragging sentiment across the broader tech-heavy index. The same volatility triggered roughly 83 billion won in forced liquidations across crypto futures positions, exposing how tightly retail trading now links equities and digital assets. Regulators are tracking rising long-term yields in the US, Japan, and the UK as a fresh source of pressure on Korea's own borrowing costs. So what does this mean for financial sector analysts and compliance teams watching Korea? Earlier, we said traders move money into stablecoins the moment volatility spiked. Here's what that actually means for you. Won to crypto flows are becoming a real-time stress gauge for Korean markets, and compliance teams should expect regulators to watch exchange data as closely as they watch the KOSPI. The SK Hynix halt and the futures liquidations both point to thinner buffers than usual across linked markets. And as global yields rise, Korea's own rate and debt calculus gets less room to maneuver, not more. Three things to watch. Whether won to stablecoin flows stay elevated after this week's volatility eases, SK Hynix trading patterns into next week, and any signal from Korean regulators on tightening exchange oversight as global rates keep climbing. That's today's AI Prism, Finance Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a WAN IFRA award-winning series. We'll be back tomorrow.